Right, my paper 6. Okay. Paper 6, question number 166 onwards. Paper 6. Right. 166. Right. What's the answer? Which of the following statements are correct as per the LK 8? Changes in accounting policies, estimate and errors. Which of the following statements are correct? Correct statement according to changes in accounting policies, estimates and errors. Right. 166. Right. What's the answer? Correct statements. When adopting new policy to present information in more appropriate manner, the financial impact must be adjusted from the previous period. Second one, an estimate can be changed by receiving new information. Second one, A, B, C, errors occurring during the accounting period is referred to as errors according to this standards. D, an accounting policy is any specific principle, basis, traditions, rules, and practices which are adopted in preparing financial statements. Right. Come on, what's the answer for the question number 166? Question number 166, what's the answer? What's the answer? One 166. Devni, Rohinika, what's the answer? Gauri? One 166. When adopting new policy to present information in more appropriate manner, when adopting new policy to present information in a more appropriate manner, the financial impact must be adjusted from the previous period. Am I? That is correct. Okay, that is correct. Okay, right. If we can't adapt, if we can't change from the here, a financial impact must be adjusted from the previous period means that is called retrospective adjustment. Retrospective adjustment. Retrospective. Retrospective means previous periods also we need to adjust. Okay, for example, let's say like this. Let's say like this. Okay, let's say like this. Let's say you are using FIFO method to measure inventory. Question 166. Alright, let's say you are using FIFO method to measure closing stock. Okay, you are using FIFO method to calculate cost of sales. Okay, here we can use FIFO method to calculate not only closing stock. Okay, to measure the value of inventories, to calculate the cost of sales, we can use FIFO method. We use FIFO method. Then, when you measuring inventory value, okay, using FIFO method, later you can change this policy to weighted average cost method. या यूज कर FIFO method को पास से weighted average cost का change करना पड़ेगा. But if you change accounting policy to weighted average cost method, then okay, this change in accounting policy you need to adapt from the previous period aspect. Let's say now we are in 2024 financial year. We started our business organization in 2015. 2015. Then the net impact of a weighted average cost method we need to adjust from 2015. Okay, we are in 2024. In 2024, we changed our accounting policy to weighted average cost method. Then net impact to financial statements we need to adjust from 2015. right? 2015 दा भी change करना start है ना. Net impact to financial statements. Okay, we need to adjust from 2015. 2015. Okay, and then we pass a double entry to retained earnings as well. Retained earnings. Retained earnings. The previous period is all change करना है. That is called retrospective adjustment. But past पे उसे लागला दिना होगा. मैं पाऊंगी कल है वो past पे. Retrospective adjustment. But if you can't adjust your financial statements from 2015, let's say you can't adjust from 2015, but you can adjust from 2020. Then 2020 onwards, you need to adjust financial statement. But if you can't, okay, then available order 20 all of the discount by 2020 net impact adjustment by now, all of 24 in prospective adjustment. If you can't change the financial impact from previous periods, then today onwards, you need to adjust your financial statement. Clear? Pronika, clear? David, clear? Gauri, clear? Clear? Right. What are the critical point of the subject? What I don't know. Magi tutor wala di na tutor pan pulang. In case 8. Right, men neti laman. Fast se balan tiro me. Retrospective application. Retrospective application is applying new accounting policy to transactions, other events and conditions as if that policy had always been applied. As if that policy has. It means now we are in 2024 financial year, but if we change our accounting policy to weighted average cost method, then we started our business in 2015. Then since 2015 we have applied that weighted average cost method. It means from 2015, okay, from 2015 we need to adjust our financial statements impact. Okay, from 2015 we need to adjust our financial statements impact to stock. Okay, retrospective adjustment. Retrospective adjustment. Prospective application. Prospective application of change in accounting policy and recognizing the effect of a change in an accounting estimate respectively. Okay, it means basically prospective means today onwards. Prospective means today onwards. Okay, at the end, right. Right. Question number 166. Right. B. An estimate can be changed by receiving new information. An estimate can be changed by receiving new information. Yes, that is correct. That is correct. That is correct. See, errors occurring during the accounting period is referred to as errors according to this standard. Errors occurring during the accounting period is referred to as errors according to this standard. Now, what do you mean by errors? It says now errors happen in this period. එහෙම කියන්න බෑ. මේ අවුරුද්දේ විතරක් වෙච්ච errors කියලා කියන්න බෑ. වෙනවා වෙන්නේ. Errors. Go to the standard. Go to my tune. Errors. Errors are omissions and misstatements in the entity's periods arising from a failure to use or misuse of reliable information that was available when financial statements for those periods were authorized for issue. Am I? Okay, ne? Right. Errors. Right. This is the definition for errors. Okay, ne? Errors can be happen in the business in the current period or previous period. Okay, in the current period or previous period. Okay, right. Therefore, we can consider errors as errors right happen during the current period itself. ළමයි current period එකේ එක විතරක් කියන්න බෑ මේ errors occurring during the accounting period is referred to as errors occurring during the accounting period is referred to as errors. That is false. D. An accounting policy is any of special principle, basis, traditional rules and practices which are adopted in preparing for. Yeah, that is correct. The law was answered. ABD, ne? Answer is ABD. Okay. ABD. Right. Answer should be ABD. ABD, yeah. ABD. Okay, Devi. Okay. Prilika, okay. Gauri. Right, right. Susini, right. Susani. Susan. Right, okay. Right. Quickly, you will answer for the question 167. What's answer for the 167? The carrying value of motor vehicle amount of Varuna Public Company Limited is 6 million. 6 million. Okay, 6 million. These motor vehicles were bought 5 years ago, right? Lifetime of all motor vehicles is 10 years. Right, useful lifetime 10 years. Motor vehicles are depreciated at 10% annually on a straight line method. Right? Motor vehicle purchased for 2 million was sold on 10th October. Sorry, it should be 1st October 2021. 1st October, it should be 1st October. With a loss of 300,000, right? Anyway, with a loss of 300,000. Sales value of the motor vehicle and depreciation for the motor vehicle for the year ended 31st March 31st March 2022 are selling value, sales value. Right, how do we answer for this question? The carrying value of the motor vehicle account of Varuna Public Limited Company 6 million. Carrying value of motor vehicle. These motor vehicles were bought 5 years ago. Lifetime of all motor vehicles 10 years. Motor vehicles are depreciated 10% annually on straight line method. Right? Motor vehicle purchased for 2 million was sold on it should be right. It should be yeah, there's a issue with this date. Our financially ending date is 31st March 2000. Right, it should be 1st October 21. Now it should be 1st October 2021. Now 1st October. Okay. Now I make a note. 1st October make a print mistake. 1st October 2021. 1st October 2021. 1st October 21 with a loss of 300,000. Sales value of the motor vehicle and depreciation for the motor vehicle for the year ended 31st March 2021. 31st March 2022. What's the answer for the question number 167? 167, what's the answer? Right here. Carrying value of motor vehicle of Auto Public Limited Company 6 million. This motor vehicle was bought 5 years ago. Lifetime of all motor vehicle 10 years. Vehicles are depreciated annually and straight line method. A motor vehicle purchased for 2 million was sold on, we will consider 1st October 21 with a loss of 300,000. Okay, sales price, motor vehicle disposal account. Motor vehicle disposal account. Here, motor vehicle purchased for 2 million, motor vehicle account credit, motor vehicle disposal account debit. Cost of the motor vehicle, cost of the disposed motor vehicle. Cost of the disposed motor vehicle 2 million. With a loss of 300,000. With a loss of 300,000, right there. Loss 300,000 was a double entry. Profit and loss account debit, motor vehicle disposal account debit, P&L. Loss. Okay. Loss is 300,000. And then sale value of the motor vehicle. Sale value. We can calculate sale value. How about the depreciation? Here, disposed date is 1st October. 1st October 2021. Disposed date is 1st October 2021. Okay, right. And then make body printing mistake carry value of the motor vehicle account of Auto Public Limited 6 million, carry value 6 million. Carry value 6 million. Date financial year ending date is 31st March 2022. Carry value ending date. Financial year ending date is 31st March 2022. Then financial starting date 1st April 2021. Starting date 1st April 2021. Okay, they have given carry value. Carry value 6 million. Then we will consider this carry value as at 1st April 2021. Minimum date carry value information missing. Information missing. Information missing. Okay, information missing. 6 million. This motor vehicle were bought 5 years ago. 5 years ago, and then depreciation rate is 10%. Depreciation rate is 10%. They have purchased this motor vehicle 5 years ago. Then, right there. Then 5 years ago, so is 6 million means half. Half of total motor vehicle. 5 years ago, making after 5 years. After 5 years. It means they have depreciated this motor vehicle 50%. 50% depreciated. Okay, this 6 million is balance 50%. Balance 50%. Okay. Now I 6 million can balance 50%. Carrying value is there, carrying value. Their cost is how much? Cost means cost is 12 million. Cost of the motor vehicle is 12 million. Cost of the motor vehicle is how much? 12 million. Make 6 million alone, 12 million cost. Cost of the motor vehicle 12 million. Okay. And then they have sold this 2 million motor vehicle on sold date 1st October 2021. 1st October 2021. Okay, 1st October 2021. It means they have used this 2000 motor vehicle over 5 years and 6 months. 5 years and 6 months. Then 2 million into 10% into 5.5 years. 5.5 years. Accumulated depreciation. Accumulated depreciation of this sold motor vehicle. How much? How much information missing? Information missing in this question. Okay, information missing. Carrying value, they have given carrying value. How much depreciation? 2000 into 10% into 5.5 years. 1100. 1100. Okay. Accumulated depreciation of this disposed motor vehicle 1100. According to this question, now I am giving the answer according to this question. Now I make a accumulated depreciation 1100. Then accumulated depreciation account debit, disposal account credit 1100. Accumulated depreciation. Accumulated depreciation. Right, depreciation. Okay, then sales value of the motor vehicle, how much? Sales value. Sale value, how much? Sale value of the motor vehicle. It should be according to this question. According to this question, sale value should be 2000 minus 300 and 1100. Sale value should be 600. 600,000. Sale value should be 600. Cash 600. Sale value should be 600,000. The sales value should be 600,000. If sale value 600,000 here, next question is annual depreciation of motor vehicle for the end. Now annual depreciation. Which one annual depreciation? Then sale value 600,000. Okay. And then annual depreciation. Annual depreciation. How much annual depreciation of this motor vehicle? Annual depreciation. Annual depreciation. Motor vehicle account. Here, motor vehicle account. Motor vehicle account. Opening balance of the motor vehicle account. Okay. Cost should be 12,000. 12 million. Cost of opening motor vehicle should be 12 million. Out of 12 million motor vehicle, 2,000 worth of motor vehicle, 2 million motor vehicle they have sold. They have sold after 6 months. After 6 months. Then the dispose date cover then 1st October 2021. Okay, opening balance of the motor vehicle should be 12,000. Then cost of the disposed motor vehicle 2,000. Motor vehicle account credit, disposal account debit. Okay, and then my dispose date is 1st October 21. Dispose date cover then 1st October 21. Then depreciation for the year. Annual depreciation of motor vehicle, how much? Annual depreciation. Opening motor vehicle 12,000. Opening motor vehicle 12,000. Opening motor vehicle they use opening motor vehicle into 10% into 6/12. Now मैं opening motor vehicle मेरा 6 month use करना. 6 months they use over 6 months. They use over 6 months. Then 12,000 into 10% into 6/12 means 600 depreciation. 600 depreciation. Then after 6 months, they sold 2,000 worth of motor vehicle. 2,000 worth of motor vehicle. It means then remaining motor vehicle 10,000. 10,000 into 10% into 6/12. 6/12. 6/12. How about the depreciation? How about the depreciation? 500. Depreciation 500. Then total depreciation of the period 1000. Total depreciation of the period 1001. Total depreciation 1100. Okay. Okay. Then what's the answer? Answer is first one. Then first one is answer. Selling value of the disposed motor vehicle 600. Depreciation expense for the period 1001. Clear? Clear. Right. Right. Sushani clear. Gauri clear. Devi. Answer for the question for 168. What's the answer? 168. A solar panel marketing company entered into agreement with the customer as at 1st October 2021 as follows. This question belongs to SLFRS 15, revenue from customer contract. Right. A solar panel marketing company entered into agreement with the customer as at 1st October 21 as follows. Here, the purchase value of the selected solar panel is 750,000. Purchase price of the selected solar panel 750,000. 750,000. Okay, purchase price actually this should be the selling price. Selling price of the selected solar panel. It should be selling price. Second one, carriage outward charges, transportation charges. Transportation charges of solar panel 10,000. Next one, fixing charges 40,000. Unit fix. Fixing charges 40,000. Next one, the agreed service repair fee for 1 year 100,000. Agreed service repair fee for 1 year is 100,000. And then here, the customer paid 700,000 in cash on the same day, and the balance to be paid in equal installment over a year. The solar panel was properly fixed and provided the service properly. The solar panel was properly fixed and provided the service properly. Right. Here, enter date to the agreement is October 2021. And then here, according to SLFRS 15, 16, it should be like SLFRS 15, huh? 15. That's one also printing mistake. Western Point paper neither. No. 16 paper. A central constraint. Right. Right. Now according to SLFRS 15, 15 revenue arising from contracted customers, the transaction price and the income to be recognized for the year 31st March 2022 are. What's the answer? What's the answer? I got one answer from Yunus, ne? Right. Transaction price. How much the transaction price? Transaction price. Transaction price is how much? And income of the year. Question number 168. What's the answer? 168. 168. The purchase value of the selected solar panel. Not purchase price. Actually, this is sales price. Selling price 750,000. Carriage outward charges. Carriage outward charges 10,000. They agreed to transfer this. They transport this solar panel. Carriage outward charge. Fixing charges. Fixing charges 40,000. And agreed service repair fee. Service fee. Service fee 100,000. Total amount how much? Total amount 900,000. Transaction price is 900,000. Transaction price is 900,000. And this whole package selling price is 900,000. That is a transaction price. Okay, transaction price 900,000. Transaction price. Next one, income of the income. Here they deliver this product on 1st October 2021. 1st October 2021. And then 1st October, as at 1st October 2021, they have delivered the product. They have delivered the product. They have transported the product. They have transported the product. They have fixed the machine. They have fixed the machine. Okay, they have fixed the machine. And service, agreed service repair fee for 1 year is 100,000. Then 1st October 21 to 31st March 2022, 6 months. 6 months. Then out of this 100,000, 1 year service fee, we can recognize to income 6 month service charges. 6 month service charges. 100,000 divided by 12 multiplied by 6 or 100,000 divided by 2. 6 month service charges, how much? 50,000. Income of the year. Income of the year, how much? 750,000. 850,000. 850,000. Clear? Clear? 850,000. Now, income for the 850,000. Unearned income. Unearned revenue, how much? Unearned revenue. Or unearned income, how much? 50,000. Current liability. Current liability. Okay, right. Income for the 850,000. Unearned revenue. Unearned income 50,000. Current liability. Clear? Okay. Right. Yunus, clear? Devin, clear? Clear, eh? Right. Right. Question number 169, 170, 171. Here, use the following information to answer question number. It should be 169, 170, 120, 170, 171. Huh? Right. Dhanuka Public Limited Company Limited present the following information for the year ended 31st March 2022. For the year ended 31st March 2022. Sales 3,200 sales. Cost of sales 1,200 cost of sales. Operating expenses 800. Equipment disposal profit 300. Interim dividend paid 100. Land revaluation deficit 200. Building revaluation surplus 250. Right. A surplus of 150 has been generated from the land revaluation for the year ended 31st March 2021. A surplus of 150 has been generated from the land revaluation for the year ended 31st March 2021, and the building has been revalued for the first time. And the building has been revalued for the first time. Building revaluation for the first time. Question 169. Question 169. What is the profit and total comprehensive income of the above company for the period ended 31st March 2022? Profit for the period. Profit for the period and total comprehensive income. Profit for the period and total comprehensive income. How much the profit? Profit for the period and total comprehensive income. Profit for the period. Question number 169. Question number 169. Question number 169. Right. Profit for the period, sales. Sales 3,200. Cost of sales 1,200. Cost of sales 1,200. Operating expenses 800 minus, and then equipment disposal profit. Profit from disposal of equipment. Profit from disposal of equipment 300. Profit from disposal of equipment 300. Interim dividend paid. Land revaluation deficit 200. Dividend there, right? Building revaluation surplus 250. Right. A surplus of 150 has been generated from the land revaluation for the year ended 31. But current year land revaluation deficit 200. Other comprehensive income OCI. This year deficit, last year land revaluation surplus. Out of total land revaluation deficit 200, 150 last year revaluation gain. Then this year deficit, last year surplus. Then deficit, this year deficit minus last year surplus. How much? 50. 50 goes to other expenses. Other expenses. 50 goes to other expenses. Other expenses 50. And then that 150. Okay. Reversal of revaluation reserve. Okay. Then let's say land revaluation deficit 150 goes to other comprehensive income. Goes to other comprehensive income 150. Okay, out of this deficit, out of this 200 deficit, 50 transfer to other expenses, balance 150 transfer to OCI. And the building has been revalued for the first time. This year building revaluation surplus. This year building revaluation surplus. Building revaluation surplus 250. That one goes to other comprehensive income. Unrealized gain. Unrealized gain. Unrealized gain goes to OCI. Profit for the period, how much? Profit for the period. How is the profit for the period? 3,200 minus 1,200 minus 800 plus 300 minus 50. Profit for the period 1,450. Profit for the period 1,450. And then OCI, other comprehensive income, net impact is 100. Then total comprehensive income 1,550. Total comprehensive income. Total comprehensive income 1,550. Then what is the answer for the question 169? Now what's the answer for the 169? Fifth one is answer. Fifth one. Fifth one. Profit for the period 1,450. Total comprehensive income 1,550. Yes, fifth one is answer. Fifth one is answer. Right. Question 170. Question 170. How much is the other comprehensive income recognized and retained earnings of the above company for the end of 31st March 2022? How much is the other comprehensive income recognized and how much is the other comprehensive income recognized and retained earnings of above company for the end of 31st March 2022? Retained earnings. Now in this question, other comprehensive income how much? Other comprehensive income, recognize other comprehensive income in this business how much? OCI 100 rupees. Other comprehensive income 100 rupees. We can calculate using OCI. Total other comprehensive income, other comprehensive net amount is 100 rupees. 100 rupees. And next one is retained earnings. Retained earnings of the business. Retained earnings. Retained earnings as of 31st March 2022. Retained earnings. Retained earnings account. Retained earnings account. Right. Surplus. Right. Right. In the retained earnings account credit total profit. Right. Net profit 1,450. Retained earnings account credit total profit of the business. Right. Profit for the year. Profit for the year. Retained earnings account credit 1,450. Retained earnings credit. And then in this question, dividend paid, interim dividend paid how much? 100. Interim dividend paid how much? 100. Cash book credit, retained earnings account debit 100. Okay, dividend payment. Then remaining retained earnings how much? 1,350. 1,350. Remaining retained earnings amount 1,350. Then what's the answer? Then question 170 answer is okay, what's the answer? 170. 170, what's the answer? Other comprehensive income total net amount of other comprehensive income 100. And then retained earnings how much? 1,350. Then answer is fifth one is answer. Fifth one. Okay. Net retained earnings 100. Sorry, net other comprehensive income 100. Retained earnings 1,050. Right. Question number 171. Question 171. Question number 171. What is the total income and total expenditure recognized for the end of 31st March 2022 for the above company? Total income. Total income. Total income and total expenses for the year. Total income and total expenses for the year. Now how to get? One of the common question tested by the examiner. Question number 171. Question 171. Total income. Total income. How to get the total income? From this question, total income, total expenses. Total expenses. Total income. Sales 3,200 income. Cost of sale expense 1,200. Operating expense 800 expense. Equipment disposal profit income 800. Interim dividend paid, no, we can't get it as income or expenses. Land revaluation deficit. Land revaluation deficit we consider as expenses. Land revaluation deficit. Building revaluation surplus during the year 250 income. Income and expenses. Income and expenses. Income and expenses for the year. During the year. Income and expenses during the year. How much? Total income and total expenses. Here, if examiner asks you to calculate total income, Revaluation surplus also you need to consider as income. Current year, in current financial year, revaluation surplus also we need to consider as income. Okay, examiner asks you to provide total income and total expenses. So here, total income how much? 3,200 plus 800 plus 250. Total income 4,250. Total expenses how much? 2,200. 2,200 total expenses. 2,200 total expenses. Okay. Sales 3,200. Yeah, sorry. Total income 3,200. Cost of sales 1,200. Operating expenses 800, right? No, sorry. Equipment disposal profit 300. 300. Sales 3,200. Cost of sales 1,200. Operating expenses 800. Equipment disposal profit. Equipment disposal profit 300. 300. Equipment disposal profit 300. How much? 3,200 plus 300 plus 250. Yes, 3,750. Total income 3,750. Yeah. Total income 3,750. Total expenses 3,100. We can get answer as fourth one. Fourth one. Here 3,070 minus 2,200. Total income minus total expenses. Total income minus total expenses how much? 1,550. Total comprehensive income. Total comprehensive income. Okay. The difference between total income and total expenses should be equal to total comprehensive income. Okay. Right. 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 Now I look at the question number 172. Question number 172. What's the answer? Question number 172. What's the answer? 172. According to LKS 37, provision contingent liability contingent assets standard, which of the following items should be recognized as provision in the company financial statement? Provision. 172. What's the answer? 172. According to LKS 37, out of following item, which item should be considered as provisions? What's the answer for the 172? Answer for the 172. What's the answer? Right, now let's answer. Provisions. Fourth one. Right. Provision for warranty. Yes, we can get. Provision for warranty. Okay, provision. Yes. An amount, timing, or value is uncertain. Provision for warranty. Yes, we can consider as provision. Yes, we can get as provision. Provision liability level. Yes, right. Provision for depreciation, no, that is false. D. Allowance for expected loss, no, false. A and B, A B only. What's answer? Third one is answer. Third one is answer. A B only, yeah, A B only. Provision for depreciation, okay, provision for depreciation cannot be considered as a provision. That is why now standard says accumulated depreciation. Without mentioning provision for depreciation, they use accumulated depreciation. Okay. D also we can't take. Provision allowance for expected loss. No, we can't take. That's why it is called allowance for expected loss. Okay. Allowance for expected loss without using provision for doubtful debts. Allowance for expected loss. Okay. A and B, yeah, only A and B. Right. $172. Okay. Right. Now I go to the next question. Right. What's the answer? Information extracted from the income statement of Kaveen Public Company Limited for the year ended 31st March 22 and the statement of financial position as at that date are given below. Right. What is the amount of net cash flows generated from the operating activities for the year ended 31st March 22 as per LK 7 cash flow statement? Right. Cash flows generated from operating activities. What's the answer? What's the answer? In this question, you need to calculate operating cash flows using indirect method. How to get the answer? What's the answer for the question number 173? 173. Right, 173. Question number 173. What's the answer? Question number 173. Operating cash flows, operating activities. In the cash flow statement, operating activities. Operating activities. 173. What's the answer? Profit for the period 5,200. When you calculating operating activities, cash flows from operating activities, you need to get profit before tax. Profit before tax. Profit before tax. Now how to get the profit before tax of this business? Profit before tax. Profit for the period 5,200. Profit for the period 5,200. 5,200 plus income tax expense. Income tax expense 320. LMI. Profit for the period. Profit before tax. Profit before tax 5,520. Profit before tax 5,520. Profit before tax PBT 5,520. And then adjustments. And then my adjustments. And then here operating profit before working capital changes. Working capital changes. Operating profit before working capital changes. Right here. Loss on disposal of office equipment. Loss on disposal of office equipment. You have deducted from profit before tax. Therefore, add back. Loss on disposal of office equipment. Add back. Add back 50. Depreciation add back. Depreciation unit add back. Depreciation 150 unit add back. Depreciation is not a cash flow. Income tax expense. Income tax expense we have added to calculate profit before tax 5,520. Income tax paid for tax paid separately unit deduct. Tax paid separately unit deduct 400. Tax paid interest paid unit deduct separately. Increase in debtors. Operating profit before working capital changes. Here, increasing debtors, you need to deduct. You consider debtors has taken money from the business. Okay, increase in debtors, you need to deduct 100. Increase in debtors. Increasing creditors, you need to add back. We consider creditors as paid cash to us. Okay, increasing creditors plus 60. Increasing creditors. If liability increase, okay, working capital changes plus. Decreasing inventories. Decreasing inventories 40 plus. If decreasing inventory, we consider we have sold inventory 40. Okay, operating profit before working capital changes 5,520. 5,520 plus 50 plus 150, 5,750, 5,720, and then right. Working capital adjustment 5,720 minus 100 plus 60 and 40. 5,720 minus 400. 5,320. 5,320. First answer. 173 answer is fourth one. Okay. Cash flows from operating activities 5,310. If you don't know how to get the answer, okay, how to prepare cash flow statement, you can't get this. You can't get the answer for this question. Huh? I have discussed cash flow statement in my classes in detail. Question 173 answer is what? Fourth one is answer. Fourth one. I have given logical understanding, logical idea of preparing cash flow statement. $5,320 is the answer. Right. 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 Question number 174, ratios question. Salia Company Limited's current ratio is 2 times and quick ratio is 1.5 times. 174. Current ratio and quick ratio. Current ratio and quick ratio. Question number 174. Question 174. Salia Company Limited current ratio 2 times. Current ratio 2 times. It means if current assets 2, current liability 1. If current assets 2, current liability 1. Okay. If current assets 2, current liability 1. Current ratio was 2 times and quick ratio was 1.5 times. Quick ratio 1.5 times. It means if quick assets 1.5 times, if quick assets 1.5 times, current liability 1. Later revealed that the purchase invoice of 50 has not been recorded. Purchase invoice of 50 has not been recorded. The effect on these ratio after recording the invoices. The effect on these ratios after recording the invoices. Current ratio increase, decrease or no change. Quick ratio increase, decrease or no change. What's the impact to ratios? Now my current ratio 2:1. Current ratio. Quick assets quick assets if quick asset 1.5 times, current liability 1. Current liability 1. And then after recording that 50 invoice, what will happen to current ratio? What will happen to current ratio? Let's say, for example, let's say in this business organization, let's say like this, let's say initially with 200, let's say according to current ratio, let's say if current assets 2, current liability 1, then let's say if current assets 400, current liability 200. If current assets 400, current liability 200. Current liability 200. Okay, right. And then here then the purchase invoice of 50 has not been recorded. Purchase invoice of 50 has not been recorded. Right. Purchase invoice of 50 has not been recorded. Then quick assets. If quick assets 1.5, current liability 1. If you added 50 to stock, okay. If you added later reveal that the purchase invoice of 50 has not been recorded, the effect on the ratio of recorded by current ratio, what will happen? Then unrecorded 50 invoice. Unrecorded 50 invoice. Now you need to add it to quick assets. Assets all then how to calculate quick assets? We calculate quick assets. Okay, by removing stocks and prepayments. Prepayments. We calculate quick assets by removing stocks and prepayments. By removing stocks and prepayments, we calculate quick assets. Okay. All right. Then when you calculating quick assets ratio here, quick assets ratio 1.5 times, 1.5 times. Okay. Then in this question, 0.5 is stock and prepayments. In this question 0.5 okay, 0.5 means stocks and prepayments. Then here quick ratio. Then right. Then here if current assets 400, if current assets 400 to then 0.5. 0.5 is how much? 0.5. Okay, 0.5 means how much? Okay, if 400 400 divided by 2, 200 into 0.5. 0.5 means how much? 100. Quick assets, then stocks and prepayments 100. Stocks and prepayments 100. Stocks and prepayments 100. Then quick assets 300. Current liability 200. Current liability 200. Okay. Then quick assets 300. Current liability 200. Current liability 200. Kalau ini ratio में 2:1 इधर तीनों में 300 divided by 200 कितने में 1.51 1.51 then 1.8 pada clear kan और बड़े idea kan हमें और आंसर कर पड़ोगे ना तो इतना में वाली ना सोचोगे ना later reveal that the purchase invoice of 50 has not been recorded purchase purchase invoice if you recorded purchase invoice of 50 what will happen stocks will increase by 50 stocks will increase by 50 and then current liability also will increase by 50 stocks will increase by 50 adela mai neither creditors account credit purchase account debit and then stocks will increase by 50 current liability will increase by 50 then total current assets how much 450 total current liability 250 250 250 okay current assets 450 current liability 250 adela mai if you recorded this 50 stocks purchases okay no impact to current peak assets no impact to peak assets मतलब मेरा भी stocks करने हैं no impact to peak assets okay but there is an impact to current liability plus 50 current liability plus 50 मतलब here peak assets 300 but current liability 250 okay मतलब 450 divided by 250 here current assets in this question over here current assets 1.8 times current liability 1 okay current assets will be 1.8 current liability 1 450 divided by 250 current assets 1.8 current liability 1 current liability 1 but here no impact to peak assets why you can't add 52 stocks now I make a when you calculate peak assets you can't add stocks all my current assets cannot stock करना है 300 okay peak assets no change but now current liability 250 then 300 divided by 250 1.2 1.2 is to 1 peak assets 1.2 300 divided by 250 means 1.2 is to 1 this is a new ratio tell me what's the answer for the question 174 current ratio previous current ratio 2 is to 1 current ratio decrease quick ratio also decrease current ratio decrease quick ratio decrease right what's the answer answer is what answer is second one is answer here now then after recording this 50 invoice what will happen what happened current ratio okay current ratio 2 current liability 1 then here current ratio decrease to 1.8 current liability 1 current ratio decrease and then quick ratio previous quick ratio 1.1 is to 1 but after recording this 50 invoice what will happen what happened quick ratio 300 divided by 250 means 1.2 is to 1 then quick ratio also decrease what's the answer second one is answer second one right 174 second one is answer okay clear if you have not done ratios okay you are unable to get the answer you are unable to get the idea without having ratios knowledge okay You can't get the idea of this. You can't understand this question. Any answer is second one, na? Answer is second one. Okay, right. Question number 174. Okay. Look at the question number 175. What's the answer for the question 175? Now, what's the answer for the question 175? Following information. Look at the question 175. Ratios में अगर मगर अबे यार क्लास की नानी लमाई आपने दिलमाई ठीक है दाना राबी ratios कर ला तीन क्लास में है हिंदा नहीं कर मतलब अवॉइड करना हमारी ऐसी नहीं right. Look at the question number 175. 175. The recording is one out element good down to right. Now question 175. Following information relates to the balance of the stock as at 31st March 2022. The inventory is valued group basis, grouping basis. The inventory is valued group basis, grouping method. They use grouping method to calculate inventory value. Right. Inventory is right. Group, sorry. Very good, right. Item ABC, quantity, unit price, unit net realizable value. Stocks value to be shown as closing stock in the trading account. As closing stock in the trading account, and stock value to be shown under the current assets. Closing stock in trading account. Right, now let's answer. Question 175. Following information relates to the balance of the stock item as of 3022. The inventory is valued using grouping method. Item ABC. Right, this will be then ABC. These items belongs to one group. Okay, we have to assume these items belongs to belongs to one group. ABC one group. Okay, we can use grouping method or item by item basis to calculate process of calculating. Okay, here they use grouping method. They use grouping method to calculate n average. Right? Okay, we consider ABC as one group. ABC as one group. One group. Closing stock in the trading account. In the trading account, we need to show cost. Cost of the stocks we need to show in the trading account. Trading account. In the statement of financial position, we need to show cost or net realizable value, whichever is lowest. Whichever is lowest. Then my total cost how much? A 500 into 50. A 500 into 50. A 500 into 50 plus 300 into 60 plus 600 into 20. Cost of the stock. Now I have copy proof back on the we can 500 into 50. 500 into 50 plus 300 into 60 plus 600 into 20. 40,000. Cost of the stock 40,000. Closing stock is a trading account. Unit cost. $500 into 50 plus 300 into 60 plus 600 into 20. Yes. 55,000. Yes. Now cost of this stock 55,000. Okay, cost of this stock 55,000. Right. And then in the statement of financial position, cost of NRV, cost, total cost 55,000. Total cost 55,000. Total NRV. We use grouping method. In this whole group, net realizable value. In this whole group, net realizable value. Item A 500, B 300, C 600. In this whole group, net realizable value. In A's unit net realizable value 40. In this whole group, net realizable value B 70, C 18. In this whole group, net realizable value. Whole group. Now, group again, entire calculate. Compare. Item by item basis. Right. 500 into 40 plus 300 into 70 plus 600 into 18. 51,800. This whole group NRV is 51,800. Okay, then lowest one is 51,000. It use grouping method. But this method is item by item basis. But in this business, they use grouping method. What's answer? What's answer? Answer is what? Question 175. Question 175. Answer is first one is answer. Closing stock 55,000. Net realizable value based on the grouping method 51,800. How much is stock written off? Stock written off 55,000 minus 51,800. The difference is stock written off. The difference is stock written off. 55,000 minus 51,800. Stock written off 3,200. Stock written off goes to other expenses. Other expenses. In company accounts, stock written off you will record in note down 2 as well. Note down 2. Okay, 175. Right. Now enough for the day. Enough for the day. We will discuss balance part on next day. On next day. Next Tuesday. Next Tuesday, or if I have some time, if I additional time, this time okay. Right. Enough for the day. We'll meet. We'll try to meet. We'll meet next Tuesday. If we can allocate some time before next Tuesday, I will allocate. Right. Enough for the day. Right. Now we'll meet next Tuesday. Right. Okay. Thank you. Right.